Hey, what's up guys? Sam here. And in this video, we're going to be breaking down the week's price action. We're going to be covering the indexes. We're going to be looking at credit, currencies, and a couple of stocks that I chose to buy today. So let's go ahead and dive in. We're going to start here where we usually start, which is going to be SPY. And for the first time in a very long time of me doing these videos with you guys, we actually have something different to cover. So often these videos have just been, up and up and up or nothing, right? You have these weeks where nothing happens. And of course that leads to some very kind of minimal price action, these little kind of narrow range price action. And then of course, in the last 2 days, you've got an expansion of the price action and an expansion of volatility, which for me as a trader who likes to trade in every direction, this is a very welcome outcome for me. I don't think I was with you guys last week. So the week before that is when I told you that I was looking to get into some shorts, and I did have to take heat on those shorts, and basically all the way up until today, and then of course they all kind of paid off in one fell swoop today. So let's cover this. Let's see if anything has changed. And we will adjust accordingly going into next week. So first thing I want to point out is this previous top right here, right around, let's call it 610. We did overshoot it. We did break above it, but we've never retested it to see if it's any good. So I think this could be the retest that sets us up for 610, and I think that could happen as early as next week. Barring some unforeseen tweet on Sunday bringing good news, and I'm not entirely sure how much more ammunition they have on that front, but barring some unforeseeable positive catalyst, I would imagine we have to come in and at least try to retest this previous breakout. If we do, I think that's an incredibly healthy thing to happen, because what you want to see here is you want to see the breakout, you want to see the pullback to the breakout zone, you want to see it happen on low volume, you want to see the pullback zone hold, and then from there continue to go back to to the upside. I think that's a healthy scenario. It would have happened at some point anyways. We might as well get it out of the way. If at any point we break back below this level here, which is roughly 610 where it broke out from, let's say that we break down here, then at that point that actually sets up a pretty gnarly situation where you would actually have an excessive high above the previous resistance, which should now be support. And if it were to break down below that horizontal line I just drew, then you actually have quite a ways down. But for now, we'll take it one day at a time, and at least volatility is back in some sense. So that is good, at least for me. Aside from that, from the outside in, the weekly and the daily, it hasn't changed all that much. You've lost a couple of points here on the daily. You went from 100 to a 90 because you're below the trailing ATR, which is now at 635. So that did knock it down a little bit. This is still extreme, which is an unsustainable situation. So either A, it has to keep pulling back in and cool off that way, or B, it has to trade sideways and cool off with time. Both would resolve that issue, but it's pretty difficult to keep pushing higher once you've lost momentum and you have an extreme value on the high-low pro. You can see what it takes to get to an extreme value, and it is a good time to cool off when you see that. Let's go ahead and move forward with the QQQ. Okay, so the Q's got a little bit of the business today. Frankly, they were due. I mean, the market had become a little bit too easy to the long side, and I certainly do prefer to see the shaking of the tree sometimes. So almost identical situation here on the Qs. Not to be too surprising. I mean, the Qs and the SPY have traded in tandem pretty much for a while now. Here the level would be right around 540. So coming into 540 makes some sense to me. Again, this is healthy. This isn't anything terrible. I think the potential for something to slip and become bad would only happen below there. right? If 540 doesn't hold, then that sets into question this entire move above the highs. That then creates a trap, and I would be actually looking for something like a retest here, where there's an open gap there at 500, which probably needs to be filled at some point. But, let's take it one day at a time. So for now, 540 would be your floor on the QQQ. No major changes to the indicator. You can see here it's extreme as well, so it has the same issue as SPY. Same issue as well, where it dropped 10 points from last week because of the trailing ETR flip. But aside from that, nothing overly major here. And you do have good support at 550. If it breaks 550, I don't have support until 540 on the Qs. So let's go ahead and quickly look at the IWM. The ever-hated IWM. And so the IWM has knocked out about 4 weeks worth of progress in one bar, one weekly bar, which as someone who was short the IWM coming into today, I am more than happy to see. So with IWM here, this is a little bit more of a difficult read. This is not a clean read, and this starts to add a little bit of complexity to the analysis. I would say that based on what I'm seeing, the highest probability thing that will happen here is that we will have to go back and retest those breakout zones on the indexes. I think the level was 610 on SPY, and I forget what it was on the Qs, but you can go back and watch the recording. But I think you have to go back and retest those breakout zones on the indexes. The reason I'm saying that is because here on the IWM, you don't have the same dynamic, right? The IWM never did even come close to breaking out above its all-time high, so there's nothing really to backtest. And unlike the other indexes, this one actually has a very bearish signal right there. The reason that's a very bearish signal is because you have an up arrow, right? And you've had up arrows for a while, right? Like, so this indicator's done a pretty good job of calling the turns. It would have got you in long here. And you can see all the up arrows here in a row. But what you don't want to see, unless you're short or bearish, is you don't want to see an up arrow and then an immediate down arrow, right? You want to see some distance between them, because when it's up and then down, what it does is it actually creates kind of a rug pull kind of effect, and really has a ability to drive price very quickly to the downside. So this combination of signals right there is different than what we're seeing. And unlike the other indexes, this one actually got its first down arrow as of today. So this, although I don't have a super clean read here on IWM, and you can see the indicator as to why, it's just a neutral chart across the board. Some folks will see this as a buying opportunity. Some folks will see this as a temporary top. I choose to not play that game, and I just say I don't know, because that's what the indicator tells me to say. But what it does tell me is that something here has definitely changed, and it adds a little bit of credibility to the idea that we have to backtest those previous breakout zones in the SPY and the QQQ. So that's kind of my working theory as we're 3 charts deep into this video. Let's see if anything that we look at will change my mind. Before we go to the next ticker that we're going to look at, which is going to be the bond market, and it will be an interesting one, so stick around for that one, because there's actually a pretty big change in the bond market that I don't think many folks are fully appreciating quite just yet. It just happened today. Go ahead down there to the video below and click the subscribe button if you're not subscribed. It certainly does help us with the ever powerful YouTube algorithm. And go ahead and drop us a like if you're watching us on the YouTube. It certainly also does help, and I would appreciate it. The only question my mom ever asks is, how many likes did your YouTube video get? So if I tell her it didn't get any likes, she's not going to cook me dinner. Alright, so let's look at the notes here. This is just a proxy for bonds in general. This is going to be the ZN. And you can see for yourself, compared to the other markets, this thing looks like a freaking mess. And I would say that it looks like a mess because it is. I mean, try to trade that. But despite the fact that it looks quite messy, look what the indicator is actually saying. It's saying it's a strong bull, right? To my eye, this does not look like a strong bull. To my eye, this looks like a neutral to up kind of chart, but the indicator really seems to like it. And it also has a very large weekly squeeze. So I'm kind of working under the assumption here that, if you look at these highs, these lows, they have higher lows, and then, you're going into these like lower highs kind of situation. So what do you end up with? You kind of end up with one of these guys. Excuse the bad drawing here, but kind of freestyling this thing, right? So you see how you're kind of in this triangle formation? I think this thing's ready to go. One thing that happened today was that they revised the job numbers and they revised them incredibly lower. So basically months ago they presented the job market as being very strong and therefore the economy being very strong. And then today they came out and said, whoops, we actually forgot how to count. And all those jobs that we said were created, they actually weren't. And of course, that is deflationary, and bonds certainly love that. I don't think stocks will love that. Now, here's the thing. I think a lot of folks have this incorrect perception of how interest rates affect the stock market. I think that folks think that if interest rates go lower, that's always good for stocks. And while that's not entirely incorrect, right, I do think that lower interest rates are positive for all assets. Cheaper money is going to pump the price of everything, all assets. In this case, I actually think that bonds are going up for bad reasons, not good reasons. So I'm not going to extrapolate that this is actually a good thing for the stock market, but I just wanted to bring it to your attention because today is a significant day for the bond market. There's a couple ways to play this. The direct way to play it is going to be through TLT, but I'm going to show you here later in the video another way that I'm playing it that I think is probably more aligned than TLT. So we never look at the bonds this way. We always look at them through HYG, and this is what we're going to do next. So here on HYG, this was a bad week for HYG. It lost the 80 handle just by a few pennies, but it lost the 80 handle. And today is actually a pretty nice move lower. So again, this kind of break here in the action, this weekly candle here on HYG is not entirely great. And it continues to build on the initial thing that we saw at the beginning of the video, which is the probability that the indexes, the SPY and the QQQ, have to go back and test their respective breakout zones is much higher than it has been in months. So HYG here basically doesn't change that way of thinking. Basically what I'm trying to do here with you guys, and really for myself as well, is go through these charts, come up with kind of a common thread that ties them all together, and then see if I can be moved off of that opinion by the end of the video. So we looked at the first two charts, which was the SPY and the QQQ. I said, hey, this looks like it needs to come back and retest that breakout zone, which is probably going to be a buy initially there. I'd be looking more for a buy than a sell at that level. We looked at IWM after that. IWM looked much weaker than the rest of the indexes, which again adds more credibility to what we were looking at initially. We then looked at HYG, which is what we see on the screen now. And again, that continues to work with that initial theme that we're looking at. So I'm not seeing anything here that would change my mind. Now I did tell you that I was going to show you a way that I played bonds indirectly today, and that is actually through gold. So you may ask, what does gold have to do with interest rates? And usually if interest rates go lower, gold loves that because, well, I'll save that topic for another video. It's a longer topic that we can get into, but lower interest rates helps gold. Gold does like lower interest rates. So today I picked up some GLD in the main room. We did the 300-320 call vertical for September monthly expiration. So it's 20 wide. I think any price $10 or lower on that I think is a fair price. And I'm looking to see if these long-term squeezes on gold It has a daily, a 2-day, a 3-day, a 4-day, and a weekly squeeze. I'm looking to see if these can fire to the long side. Kind of looking at this as a potential flagging pattern, pennant, whatever you want to call it, breakout. So would I have bought gold today if interest rates were not potentially reversing to the downside, bonds reversing to the upside? Probably still yes, but probably not with not as much conviction. So I took a couple of trades in the room today. This was one of them. This was GLD. Let's keep going here. Let's finish the big picture stuff with VIX, like the volatility products. And then I'll wrap the video by showing you all the other things that I did today in the room. So this is a healthy move in VIX, and this is very common for VIX, is that everyone gets hyper complacent. Nothing happens, nothing happens, nothing happens, nothing happens, and then everything happens all at once, much like life itself. So here on VIX, this looks like a real move to me. It had been coiling in this kind of ultra boring, kind of just very tight coil kind of situation. And, you know, you were extreme down here, which is the opposite of what I showed you on SPY on the Qs. If you remember the SPY on the Qs, it was extreme to the upside. This got extreme to the downside. This thing is on the floor at this point. This actually still has a ton of room to go, in my opinion. You know, I think, you know, of course, you know, if any good news comes out, this will dip. But this has room to come at least to about 25. And then we'll have to see from there, right? There's a kind of a nice little landing zone here. If not 25, then, you know, structurally at least 22, which is this previous high here. So this does not change my mind in terms of the common thread that we're finding across the beginning of the video. Let's go to the VVIX next. VVIX is going to be the VIX of the VIX, so think of it kind of like acceleration. You can't create velocity without initial acceleration, and this looks legit to me as well. This looks like it at least has to test here. Very nice zone there, and if this actually were to break out, this could become something that I don't think anyone expects. I won't go that far quite just yet. I think that would be putting the cart in front of the horse, but I would absolutely be looking for a retest there. If by next week we've breached here, 120, let me have you do this. On your charts, leave an alert on VVIX at 120. That will only trigger if we go through that level. If we go through VVIX 120, and especially if we close above 120, I would want to be max short everything, mostly tech. So big level there, 120. For now, it's just teasing, but we'll see if she has anything left to give above that level. So let's kind of put it all together here. So we started the video, we looked at the SPY, we looked at the QQQ. Both of them were giving some internal problems that we have not seen in a while, some structural breaks, mostly on the hourly and the 4-hour charts. Barring some good news, the expectation was that those charts would have to go back and retest their breakout zones. So on SPY it was 610. And QQQ would do the same thing respectively. That was the initial thought. We then looked at IWM. IWM was weaker than both and kind of added additional credibility to the first idea. We then looked at interest rates through ZN, and that looks like a panic move to me that could potentially catch a lot of people off guard because I think a lot of folks are short bonds. We looked at HYG. HYG ties together with risk, and that sold off as well. So notice that we're looking at all these different things, and we're actively trying to disprove the initial thought process. And all of these things are so far working together. I wouldn't say that they're super synced up because, again, you have very, very strong daily and weekly charts, but the cracks are there. And in the peripheral parts of the market, those cracks are not being patched over. In fact, they're actually expanding. So then we swung it all the way to the vol products, and the vol products, while they're not giving away too much, they have a ton of room that they can squeeze to the upside. So very very interesting week coming up. I would imagine, again, based assuming that we don't get some kind of, trade deal, China, world peace kind of thing this weekend, I would be looking for another couple of days of downside, and then maybe by next Friday's video we can see if it would be time to get back in. So that's kind of the big picture market overview. Again, if you're watching on the YouTube, do drop us a like, drop us a subscribe. It does help us, and you'll keep in touch with all our content. If you've liked the indicators that I've shown you so far, there is a link below the video, so you can check those out if you wish to. So let me show you some things that I did today in the room. A lot of these were brought up by members that are in the Simpler Trading room, and we were doing some chart review in the live session, and I was like, you know what, you guys have some pretty good picks, and I think they do. So a couple of these are pretty speculative. I'm not seeing anything like major that I want to be buying right now, at least not yet. Major meaning like Amazon, Apple, Google, Microsoft, the big ones. But I am seeing things that I want to buy in multiple different kind of corners of the market that maybe can do their own thing as the indexes figure themselves out. So one of them is USAR. This is a rare earths company, and it's been having a lot of positive kind of things showing up here. And what I like about it is it has a very strong weekly squeeze, and it has a pretty strong daily score. So it also has a 2-day squeeze, and it has earnings coming up. So the intention with this one is actually, for me, is going to be to actually hold it through. You can see here it's got all these higher lows, and at least for now it has some higher highs. So kind of working on this kind of channel thing. So could it come up here and hit 17? I think so. Not only do I think it hit 17, I think it could actually hit 20 again. So I picked up this one. This one I picked up just on my own, but I did type it into the room that I was buying it. I started buying the $13 calls. I bought the $14 calls. I bought shares. So I bought this one in a couple of different ways. It is very speculative, but I think it's worth it. The one that I actually posted in the room that I bought is MP. This one I was more willing to just put in the room because it's a little bit more liquid. It also has very high short interest, and I bought it because it has a 4-hour squeeze. So basically the strategy is that you look for things that have a max bull score, and then if you have a 4-hour or 1-hour squeeze, when the daily is max bull like this, then you just have to buy it. And you do that every single time until it stops working. So the daily gives you the confirmation. The squeeze comes from the intraday 4-hour. Every 4-hour squeeze inside of a max bull chart is a buy until proven otherwise. This one is in the same business as the one we just looked at, USAR. So they're basically the same thing. This is kind of like the big brother. This is the biggest one in the country. So this one was posted in the room. I did buy some gold as well, like I told you earlier. The chart works. The story around interest rates works. I don't think gold will care if the stock market goes down or up for that matter. So just looking to see if gold here can break out. I bought something for September. I did the 300-320 called vertical. I think we got in for like $9.30 or something. So looking to see if that one can go. What else did I do? I'm still short the SPX via call credit spreads. I got out of half today, but I'm still short the 6,300 calls on the SPX. So that's still a trade that I'm willing to hold. And I'm bidding on some Rocket, RKT. I have not gotten to fill yet because this one's a little bit too high for the price that I want to pay for it. So if it can catch a dip, I am a buyer. And so I'll put this one in your dish, and you can choose to do what you want with it. But I don't have a fill yet. I'm looking for a fill right around this previous breakout zone. So just right around 15 to about 15.5 would be where I'd want to get filled. And the reason being is it's a max bull chart and it has a very nice looking weekly squeeze. And again, I think that this one can kind of buck the trend, rocket. It'll help it if the market's good, usually. But it's not like, it's not like an Apple or, an Amazon or a Google that has, that moves with the index. This one can kind of do its own thing. So that's kind of where I'm at. Let me check my book. Yep, that's it. All right, so that wraps the video. Again, hopefully you can follow the thought process there. We'll do this every week, so I'll try to explain the thought process, and it'll just make more and more sense as we go along, especially for anyone that's new that might be watching on the YouTube. But the thought process is we always start with kind of the big picture stuff, which is the indexes. We go to the credit markets and the peripheral parts of the market and just see if there's anything that's telling us something different. And at least going into next week, most things are leaning for continuation to the downside. Nothing, in my opinion, quite just yet that would be overly dangerous. But I do think that you could see 610 again on the SPY. As a retest, and then we'll have to make the next decision set from there. So I'll go ahead and wrap the video there, guys. As always, I appreciate you joining us. For those of you that are in the room, I'll see you back in the room on Monday. And for those of you watching on YouTube, again, drop us a like, drop us a comment. If you have any questions or any tickers you want me to cover next week, put them in the chat, and I'll catch up with you guys next Friday.